Traders, we're looking at S&P 500 and mini futures. Time frame is 2000 tick chart, and we're going to be day trading using a price action strategy. Now, as a price action trader, I need to identify the structure, and I can clearly see that the structure is a bearish downtrend. Now, my goal is to identify the proper pattern. I can see that I have a spike and a channel downtrend, and my goal is to always find a channel that makes the candle fit nicely inside of it. This channel had a break, a new extreme for the channel was formed, which according to trendline rules is indicating to me that I expect correction phase or possible reversal. However, the downtrend was very strong. I have a supportive indicator on my chart. This is the blue line 21 bar exponential moving average, supportive indicator. And I can see that basically from the very beginning of the day session, prices were trending below this EMA. So this is still a very strong downtrend. I'm not looking to go long by any means just yet. I will need to see a proven trend in opposite direction, because once the trend is so strong on its own, I'm leaning more towards potential continuation of the bearish bias. However, we have a new low, we have a correction, so I cannot go short directly at the lows either. So I'm going to wait for market open. Market is going to open in 5 minutes. All right, so the market opened, uptrade ready to break multiple X to new extreme. Right now, the bias is still bearish in this market, so I'm expecting for prices to pull back below the resistance. And if we get a failed second entry long, I'm going to be interested in shorting. Why? Because the main bias in this market still remains bearish. The bullish correction played out, and if we push below EMA, this is going to be a good enough sign for me to take a good short entry back into this trend range and resume the overall downtrend. I cannot short just yet. I want to have more confirmation because we just had to break new lows. For that reason, I'm just waiting to see if we push strongly below EMA, and this is going to be good confirmation for me to tell me that sellers are still in the market. There was no additional pullback. Market just sold off, and there was a bearish move straight to the bottom of this trading range, which is unfortunate because I was even about to take a nice lower high right below the EMA, right below the resistance that would confirm this failed breakout after breaking a new high. But you guys can see there was no tick higher above either one of these bars, which is indicating that there is no bullish trap just yet. So for that reason, I just had to sit here and watch this go down, even though I was expecting for prices to go down. If there is no setup, I cannot take just a hidden entry because most of the time when I'm going to take it, it may not pay off. So I'm just waiting here, and now we move too far down below EMA. Notice how far away we are from the exponential moving average. Take a look at this gap. I cannot sell at these lows. It may work because the trend may be strong, but I just have to stick to the rules, and I cannot go short just here just yet. All right, traders, I'm about to resume the video as I'm going to take a second entry short, and we got filled on a second entry short. I'm going to go for a tick target profit. I'm going to move my runner at these lows, and I'm looking at new low, first entry short, pullback, second entry short, big bearish bar, two large legs up, first leg up, pullback, second leg up. So this is a two-leg up pullback. Downtrend needs to get new extreme. We touch the resistance, the key entry point that is holding prices. We bounce off my limit order, but we didn't get filled just yet. A lot of times we need to tick through, and we finally got filled. So I'm going to tighten it quickly. Our first trade for the day, second entry short. Now anything we make on this trade is just a bonus, is just a gravy. And I'm looking at new low form right here, matching lows. First entry short, second entry short. Downtrend is still in play. After break, I expect new low to be formed for the downtrend. And the fact that we were very close to this resistance and was such a nice bearish bar, I decided to go short here, even though it's above EMA, because uptrend played out with the break and new high. So second entry short, we'll see if we can get the decent runner. All right, resuming the video as we have a lower high after the second entry short. But I'm waiting here because EMA just right now got flat. We can see multiple bars stacked. It is very tempting trade, but because right now the exponential moving average flattened and it's in the middle of these bars, I'm going to be a little bit careful here, and I'm going to wait for a safer setup. It is a nice bearish signal bar, but because of the flat EMA, I'm being a little bit more patient here, a little bit more careful here. Overall context still needs new low for the downtrend. Resuming the video, market is above the trend range, but notice what we have. Now we have a little bit conflicting situation. We have what looks like bullish imbalance, because consistently prices are not making it all the way down to this support. Instead, we are bouncing from the middle of the trend range, and we keep creating high lows. This is indicating to me bullish imbalance, and for that reason, I'm not looking to fade any breakout just yet. Now, there's also a major bias that is bearish, so I'm looking to go short, but I need to see more confirmation. I'm thinking about something like a failed second entry long, below EMA, below the resistance that would trap long traders, and there will be confirmation for me that sellers are in the market. But as of right now, it is quite dangerous to pick a top when there is a bullish imbalance present in the market. So I'm going to draw the short and trend line. I'm going to look for something like this if we can get some pullback, failed second entry long preferably. All right, traders, we have a failed second entry long forming, and I'm going to take engulfing entry. I'm going to go for 8 tick target profit, and I see new high, first entry long, pullback, second entry long, failure. Now the context still remains the same. We have break a new high for the uptrend, strong push below EMA, and we have second entry long below EMA while this downtrend is in play. So I'm expecting for longs to get trapped, a nice big bearish bar right below EMA, back into this trend range. Let's see if we are right here. The trend line may be a little bit wider. Still like the overall context. I'm going for 2 points. New high, first entry long, second entry long. We didn't get the... And wow, that was quick. So I'm going to quickly tighten the run. Alright guys, so you can see I was expecting a failed second entry long here, but we only had a lower high. I cannot take just lower high when there is bullish imbalance present. Now, there was additional pullback to the upside. I'm just waiting. I'm not looking for wider pattern like this. Why? We talked about this in our chart review videos a couple weeks back. I may pull up the example. This is too wide for a trading range structure. Main bias is bearish. We traded down, and you're most likely going to break lower because you trade down to this trend range. This is too wide of a structure. I'm sticking to short-term uptrends, and everybody who went long here using a wider uptrend is getting trapped. You see it ticked higher, instantly reversed down, there is no congestion. I decided to use engulfing entry because it's such a high probability setup. We came from the failed breakout all the way down here. So this is how you play bullish imbalance in bearish structure. You need to be careful. You cannot just fade the breakout. This is not a healthy trend range. I'm going to tighten the stop loss above this swing right here in case we have significant pullback. So this is a failed second entry long, our second trade for the day. And you guys can see I'm mainly sticking to sells, even though you can sneak in a couple more longs. Main bias is bearish. We're above trading range, and a failed second entry long is high probability setup. This is a short trap. And let's see, I would like to get some nice runner all the way down here. Let's see if we can get lucky with a little bit significant sell-off here. All right, traders, and our runner just got hit. So we managed to get only a couple more points. We'll see. I'm going to redraw the trend line. We have similar situation right here. We still failed to reach the bottom of this support. So there's still some bullish imbalance present, but I'm still not buying. This downtrend still needs to get new low. I extended it because this is right now with the major direction of the bias, which is bearish. All right, traders, here's the example from 2 weeks ago, something around that, where we had a downtrend. We had a consolidating trading range with a bullish imbalance, and this uptrend is too wide of a pattern for this trading range. You can see upper half is completely empty, and this is mainly a trading range. And we had second entry long here, new high, first entry long, second entry long, that resulted into a trap. So I see it as an exact repeat pattern from the structure perspective. You can apply the same wider pattern to this structure as well. Everybody going long on a second entry long is just a little bit too late because overall structure is a trading range, and you want to stick to the tighter trend lines. You can draw a little bit wider, but you would draw it like this, which has a break, move to a new extreme, indicating that now it is okay to sell. All right, traders, we just had a new low, first entry short, second entry short below EMA coming off of this resistance, which is indicating that the bias is still bearish. We still need to get new extreme. The reason why this second entry short was so great because we had a small little congestion up here and we broke lower, pullbacks with a breakout pullback, additional weight to enter congestion. EMA is holding, the support is acting as a resistance, overall bias is bearish, new low, first entry short, second entry short. But as you can see, I could not have entered here because the signal bar is bullish. Unfortunately, had there been a bearish signal bar, would have been absolutely gorgeous high probability setup. But like this, can't really short this. And the signal bar after that is way too big. And by that time, double bar entry, the scalp was already made, so you would be entering too late. New low for the downtrend was made, and right now we are bouncing strongly to the upside. These are our two trades for the day, the second entry short without the runner and a failed second entry long. We managed to take a little bit of a runner here. I got my two trades for the day. I'm gonna wrap it up. If you made it to the very end of the video, you're probably enjoying the content, so please like the video, subscribe to the channel if you haven't and you're interested about trading. I'm gonna see you guys in the next one. Take care, everybody.